Welcome to our EUR USD analysis report for October 13th to 18th, 2025. This week, we saw significant price action as the pair tested critical technical levels. EUR USD reached 1.17285 before experiencing a sharp reversal, ultimately declining toward the 100-day moving average at 1.16484. This comprehensive analysis draws from TradingView, Investing Live, Action Forex, and Daily Forex to provide you with actionable insights. We'll examine the technical performance, analyst perspectives, key market drivers, and present both short-term and medium-term trading strategies. Let's dive into the details. Our analysis draws from 4 premier Forex data sources. TradingView provides real-time charting and technical indicators. Investing Live offers expert technical analysis from Greg Michalowski. Action Forex delivers comprehensive market outlooks, while Daily Forex contributes insights from Christopher Lewis. As of October 18th, EUR USD trades at 1.16506, down 0.31% from the previous close of 1.16869. The day's range spans 1.16496 to 1.16869, 1.17283. Year to date, the pair has gained an impressive 12.51%, though it's down 1.38% over the past month. Trading volume reached 247,310 contracts, reflecting strong market participation during this volatile period. Euro to US dollar's technical performance this week was marked by a critical resistance test and subsequent reversal. The pair reached 1.17285 on October 17th, just below the 50% midpoint resistance at 1.17297 before encountering steady selling pressure. This triggered a sharp decline through the 38.2% retracement level at 1.1680 to 1.1685. The 100-day moving average at 1.16484 emerged as critical support, with buyers actively defending this zone. The low reached 1.1657 before a modest bounce. Friday's pullback confirmed a breakdown through a significant uptrend line, suggesting increasing downside pressure. The chart clearly illustrates this volatile price action and the importance of the 100-day moving average. 3 leading analysts offer valuable perspectives. Greg Michalowski from Investing Live notes that the 50% midpoint resistance successfully capped upside attempts, and sellers need a decisive break below the 100-day moving average to gain control. Action Forex's weekly outlook indicates EUR USD's rebound from 1.1540 was capped below 1.1778 resistance, with further decline expected. Christopher Lewis from Daily Forex observes the market breaking down through a significant trend line. Key resistance levels include 1.1917, 1.1778, and 1.17297. Critical support levels are 1.16484, the swing area at 1.16449 to 1.16596, 1.1540, and major support at 1.1390. 4 key factors are driving euro to US dollar volatility. Federal Reserve policy remains crucial, with the September 50 basis point rate cut marking the first reduction in the current cycle. Market expectations for further cuts remain elevated, though mixed economic data creates uncertainty. The ECB maintains a dovish stance amid weak growth concerns, with inflation moderating. This policy divergence between the Fed and ECB is driving significant volatility. Economic data releases show the U.S. labor market cooling but resilient, while Eurozone manufacturing PMIs remain weak. Geopolitical factors, including global trade tensions and safe haven flows, add to market uncertainty. Understanding key technical levels is essential for successful trading. Resistance levels include the September high at 1.1917, intermediate resistance at 1.1778, and the critical 50% midpoint at 1.17297. The current price of 1.16506 sits between these resistance zones and support levels. On the support side, the 38.2% retracement at 1.1680 to 1.1685 provides immediate support, followed by the crucial 100-day moving average at 1.16484. The recent low at 1.1540 represents major support. The visualization clearly shows how these levels create a structured trading environment with the current price positioned near critical support. We present two distinct short-term trading strategies. The range trading strategy targets a bounce from current levels with a buy zone at 1.1650 to 1.1665, targeting 1.1730 to 1.1750, and a stop loss at 1.1620. The rationale is that the 100-day MA has proven to be strong support, and a bounce could target the 38.2% retracement level. The breakdown strategy activates on a sell signal below 1.1640, targeting 1.1540 to 1.1560, with a stop loss at 1.1680. This strategy assumes a decisive break below the 100-day moving average would confirm bearish momentum and trigger further selling. Key levels to watch include immediate resistance at 1.1680 to 1.1685 and major resistance at 1.17297. On the support side, immediate support sits at 1.16484, with major support at 1.1540. The trading strategy visualization chart shows how these levels interact with price action. The chart displays multiple horizontal lines representing major resistance, immediate resistance, the range trading target, the buy zone, the critical 100-day moving average, the breakdown sell signal, and the breakdown target. This visual representation helps traders identify optimal entry and exit points based on price movement relative to these key levels. Our medium-term outlook presents two scenarios. The bearish scenario has a 60% probability, with targets at 1.1540, 1.1390, and an extended target of 1.1252. Key conditions include a decisive break below the 100-day moving average, continued USD strength, weaker Eurozone data, and more hawkish Fed rhetoric. The bullish scenario has a 40% probability, with targets at 1.1850, 1.1917, and 1.2000. This requires a strong defense of the 100-day MA, a break above 1.1778 resistance, improved Eurozone data, and a more dovish Fed stance. The current technical setup favors the bearish scenario. Upside risks include stronger Eurozone data that could boost EUR, more aggressive Fed rate cuts weakening USD, U.S. fiscal concerns undermining dollar confidence, improved global risk appetite favoring EUR, and a technical breakout above 1.1778, triggering momentum buying. Downside risks include continued deterioration in Eurozone indicators, a Fed pause or slower pace of cuts, supporting USD, geopolitical tensions driving safe haven flows to USD, a technical breakdown below the 100-day MA confirming bearish momentum, and greater ECB policy divergence pressuring euro. Traders must monitor these factors closely to adjust positions accordingly.